So TD Bank has become the world's most shorted bank stock with $3.7 billion on the line and topped the list ahead of BNP Paribas, Bank of America and JP Morgan Chase. To do next, buy, sell or hold, as the stock is down 17% in the last 1 year and is trading below $80 on TSX. So I will give my opinion very shortly, but first the question we should ask is, what's the reason behind this frenzy of short selling of TD stock? So there are mainly three reasons. First is TD has roughly 10% stake in US largest public traded brokerage firm Charles Schwab, which recently lost $47 billion in market value as it came under scrutiny over its unrealized bond losses of $28 billion. And in the last 1 year, the stock of Charles Schwab's is down around 40% from $82 to $50. The second reason is TD's exposure to the Canada's housing slowdown. According to the Canada Mortgage and Housing Corporation, variable rate mortgages represents 44.2% of total mortgages in Canada. As interest rates keep rising, it makes housing less affordable, which also caused a rise in the consumer insolvencies as per January data. Now, this could negatively affect TD Bank being the second largest mortgage lender in the Canada. So now the third reason is TD seeks to close a $13.4 billion deal to acquire the First Horizon Corporation, which aims to expand its presence in the US market. However, recent volatility in the US regional bank sector has caused the share prices of First Horizon Corporation to plummet to around $17, about 30% below TD's offer price of $25 a share. Now the worst part is that as per the contract, TD is obligated to complete the transaction but would have to pay around $25 million to First Horizon if regulators don't approve the deal. And if TD Bank decides not to proceed with the acquisition of First Horizon Corporation, then the bank can sue for the damages, which could cost TD hundreds of millions of dollars. So mainly because of these three reasons, investors are betting big against the TD Bank. I won't go into details about these reasons, but I'll quickly touch base upon the Canadian housing market. So according to the Government of Canada, insolvency statistics for January 2023 shows that the consumer insolvency is increased 14.3% for the 12-month period ending January 31st, 2023. Now, TD Bank may encounter difficulties if a significant number of consumers fail to repay their loans. Now, let's see what I personally think about this big short against TD. So, although the short position is quite large, around $3.7 billion on a relative basis, it only represents 3.3% of shares available for trading or float, which is up from 2.8% a year ago, and it is not a significant increase. But we must acknowledge that so far the TD short has been a winner. In March, TD stock was down 11%, which was the biggest decline in the S&P TSX Bank Index. The decline wiped out around 18.1 billion Canadian dollars from the bank's market value. And yes, regarding the US regional bank First Horizon Corporation acquisition, TD might have to renegotiate the deal and have to move forward cautiously. But all in all, there is currently little evidence to suggest that there are concerns regarding the ability of Canada's banking sector to meet its financial obligations, particularly when it comes to having enough cash and other liquid assets to cover any unexpected withdrawals or losses as SVB Bank. Now, in terms of stock price, we might see some correction in the short term, but definitely this is going to be a good opportunity to get in for the long term ride. So thank you very much for watching this video. If you like my content, please do like, share and subscribe the channel. If you have any questions, feel free to ask me in the comment section. Please consider that this video is just for an educational purposes, and please do not consider it as any recommendation.